years. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.
It is Friday, August 23rd. My apologies for yesterday. Yes, there was some screen freezing. Yes, there might have been some audio issues, but I think I figured everything out. And I got some good news for you. But we're going to go over all of the stuff today about the Fed Chairman Powell's speech. Trendspider has a great new tool that they put fundamentals in, a new scanner for everybody. Permeable Tom Lee, is talking about more. Hey, we're going to have a 3 times IWM or whatever. Biggest movers of the day. We got Roblox, FFIE, and Mullen. Soared yesterday. We'll look at those charts. ROKU and CHWY were upgraded. Earnings, Workday went nuts. Workday, in 15 minutes, you made 23% from the bottom to the top. CAVA, NVDA, we'll look at their earnings coming up next week, and then we'll do social requests and finally the scans. So first off, I received some love in the private Facebook group. I appreciate you guys saying nice stuff about what I do up here on the link tree, linktr.ee/dailystockpick. All the social stuff is up here at the top. So if you want to join the private Facebook group, it's right here. It's the Facebook logo. If you don't have to. It is private. You have to answer one question. Just hint, the host of this podcast is not Bozo the Clown, even though I got white teeth and red hair. Well, it's red hair with blonde highlights. But yeah, Facebook group right there, Instagram, everything. I do have some Twitch followers. I've been looking at maybe doing dual broadcasts on Twitch and YouTube. I don't particularly use Twitch, so I don't know enough about it, but I think the stream would look exactly the same. So if you want Instagram, there's Twitter or X, Vaz, Spotify, Apple Podcasts, the whole thing. Substack, everything that you need is up there on the link tree. So thank you for the kind words. I appreciate it. And there's a link to my Fire podcast as well. And I am going to update the Fire podcast. It's just I don't have a lot of time. And yes, yes, I bitched yesterday, and yes, I've been in a bad mood. I got like no sleep last night. I think 2 or 3 hours. So I'm in a little bit of a mood again today, but it's Friday, so it's all good. I'm going to start doing yoga again. I think that's where my stuff is going downhill. But let's look at the cues, because it's important to realize, yes, we've had this nice 8-10% bounce. We saw a little bit. And I say a little bit, but you can see, and hopefully you can see this. If you have 4-hour charts, go and look at the afternoon candle, because the afternoon candle shows a turnaround. Now, what I want to point out is last year on the left here, okay? Last year at this time, you saw a nice rally into September, and we can look at a little bit more. You saw a nice rally. We talked about those 3 downturns that we saw last year where it was 8%, 8%, 8%. Well, we saw rallies of those 8% up. It was lower highs until we finally got that final bounce. Expect the same thing. Expect the same exact thing. I don't expect us to go straight up from here. I do expect next week to be a catalyst. NVIDIA earnings. I mean, we'll talk about it. But NVIDIA earnings next week, I do expect to be a catalyst. Now, let me talk about my setup first, because I forgot to bring this up. Okay, I posted this on Twitter, so if you want to see it, you can go. This is the current setup. So this is where I'm sitting. When you guys see my little head in the corner of the video, I'm sitting in that chair with my iMac. Those are 4 8-terabyte drives, so it's 32 terabytes. I think that was what was causing the problem, because I think that the iMac just doesn't have enough to look at 32 terabytes of drives, plus do all of the stuff that I needed to, so I changed that. So today should be better. I got those 2 lights, and yes, I got a little cord hanging down from my TV. It's been 10 years. I still haven't fixed that, but I mean to. Now, the new setup is going to be this. It's a 49-inch Samsung monitor that is enormous with a MacBook Pro that I'm running right now. I tried it out yesterday, okay? I tried it out. This is what it looks like. I've got OBS running. I've got my, the screen that you see there. This is all behind the scenes look. I know you don't care about it. I'm just kind of saying, hey, I would have done this today, but that little video camera that I got on my laptop just looked horrible. You were seeing the bottom of my chin. I'm 54 years old. Nobody wants to see the bottom of my chin. So that's my setup. Hopefully by Monday, I'll have a new webcam. I ordered it off of Amazon. It's coming tomorrow. I'll have a nice big and better setup. It'll be faster, okay? One thing that I want to point out, this is a little clip from Instagram, from The Compound, which is a great podcast. I know my podcast is good. The Compound has great discussions. It goes on, and they do ramble a lot, and there's a lot of like little details that you don't necessarily need to know. But there are gems like this. And the gem that this clip says, it's a shocking analysis that goes back to 1928. Shocking. When the stock market is up, in a year when the stock market is up, it is up on average 20%. 20%. So if you think we're going to have a positive year, and again, it's guessing, but it's up 20%. On years when we're down, the average is 13%. So we talk about, technical trading and the algorithm, how sometimes you don't win more than 50% of the time. Sometimes you lose, but because your winners are bigger than your losers, you wind up being positive in the end. It's the same thing with the stock market. So if you can assume that we're going to have a good year, and one of the co-host, actually, Ben, says, hey, I'm just going to become Tom Lee, the permable. Because at the beginning of the year, if I think we're going to have a good year and we're going to head in there, I'm just going to call it 20% gain and just flat out. And you become known as the biggest bull. I mean, it's a great strategy based on statistics. So, again, the Qs, where did we start the year here? We started the year down here at around 400. You're at 480 right now. What's 400? What's 480? 20% up. So if we are going to end the year 20% up, it's right around the price, 480. So don't expect a hell of a lot of big gains unless we start to come down, and then you can move higher. And so my thing has always been, hey, we're patient. I am adding to NVIDIA on the dips. You need to add to NVIDIA. I just can't imagine that long term you might get burned this time on NVIDIA. It might come back to 90, okay? My thing would be add to your position. I'm dollar cost averaging into this. I have some that I purchased at 130. It's at let's see. NVIDIA right now is at 125. That's SMCI. NVIDIA right now is at 125. I put in NVIDIA before in charts the support that I thought it had between 120 and 130. That's where it's trading. And if we go to the weekly on this one, we'll look at this one later with the earnings stuff. There's some technical analysis that goes in. I've pointed out every time it dips below that 21 day, it's been a buy. Now the 21 day right now is at 105. Maybe it pulls back to that. I don't know. But this clip was really interesting. It pointed me towards, hey, I need more patience if we're going to just end the year up 20%. And that's a good year. So one of the things that I want to point out, Trendspider did this great video, and the video is good. I'll link to this article. Tailor your market research with fundamentals. Jason goes over how you can put in fundamentals, and they go over NVIDIA, and they show you how it's actually become cheaper over time, and how NVIDIA has plenty of cash on hand. Maybe rather than doing a blowout quarter, maybe they're going to up the dividend. Maybe they're going to do a historic buyback. I don't know, but something's going to push that stock higher. I thought this was great. I really like this. Another thing that Trendspider provided, import the scan. 81 green inside bars. You want to know how much of the S&P ended the day with an inside bar? We talked about inside bars. They could be good, they could be bad, but it triggers some type of reversal. 81%. 81 out of 500, not 81%. But you can import that scan into your Trendspider. So I'll include that in the newsletter. If you want to get the newsletter, it's over here. You can just go dailystockpick.substack.com. It is free during the week. Okay, the weekend I do post paid content, but during the week it's 100% for free. And all of the links that you see in here will be in that newsletter. So import this. It's great. Talking about Tom Lee, Tom Lee's benign Fed rate cut, solid NVDA report can fuel stock gains. He expects nothing out of today. I expect nothing out of today. I expect Jay Powell to kind of say, hey, we're going to cut in September. We're going to cut by a 1/4 point. I would not expect a 1/2 point. The economy's too good for him to cut by a 1/2 point. So I would expect a 1/4 point. I wouldn't expect a huge market sell-off. It's a Friday. You don't do anything on a Friday. You just don't. So he's going to speak moments away. Biggest stock movers of the day. Cava, we talked about Cava. Right after their downgrade, they get an upgrade. They get not an upgrade, but they report killer earnings. Raw stores surged. Workday was crazy. And I want to point out Workday, and I'm going to do it here just now because Workday was nuts. I want you to see a 1-minute chart in after hours of Workday because it was a crazy, crazy setup. Within 15 minutes from bottom to top, you made 23%. Okay? The 1-minute chart looks even crazier. And if you could have gotten this, and yes, you could have gotten this, remember, trading with confirmation is a strong tool when you see something like this. You see this pop here at 226, that told you, hey, something's going on. Well, they announced a buyback. And boom, it took off. And it took off by 23%. And by the time you got down to it, you could have, even if you just traded the confirmation, or if you just held it into today, you had that one. You had it. So again, this one was nuts. I think it's just a buyback that they announced. Jumped 11%. Q2 results that exceeded expectations. Q3 subscription revenue, blah, blah, blah. Red Robin Burgers plunged 17% after the company reported a wider than expected Q2 loss. I love Red Robin. I mean, endless fries. Who can't? If you just order one bucket of fries, you're not living. You're just not living. So, Roblox, which is a core portfolio holding. Weinstein stage 1 complete. Okay, this chart shows you. I don't use Weinstein stuff. Trendspider loves Weinstein for some reason. They always kind of look at it. But you can see, what does this do? 30-week moving average right here, that blue line. Okay, when it gets to that point where it's just leveling off, the stage A, nearly complete. Stage B is where it takes off. Okay, I have said this. Buy Roblox under 40. Yes, it's in the core portfolio. It is not one that you want to just sit and hold forever because it's been in this trading range for quite a while, for a long time. We go back to March of 2022. It's in this trading range. Now, it has the ability to move above that $45 trading range. But if you buy it at $43.36, and it's capped out here of 45, and we're not done with that Weinstein stage, you're coming back down here below 40. And there's no reason not to, to buy it here. I'd rather see you buy it at 52, 53, where it starts to break out. You can see it's broken through this a couple of times. It gets pulled back. So I don't want you to be falsely, lured into this one. But it's important to notice that this is just one of the things that you can see. And again, if you have Trendspider, you can see all of this stuff. You can get my 4-hour algorithm. If you don't have it, you can sign up. Now, Faraday Futures soars 103% as it reverses recent downturn. Now, wasn't any news. There wasn't any kind of announcement. There wasn't anything on this. There was nothing. Short interest stands at 9.5%. In pre-market, this is up 26%. It just got through a reverse split. And I don't understand what's going on with this one, but I know I get asked about it a lot. There is nothing to this stock. This is simply a trade. But when you see something like this, you need to take advantage of it. Not from a standpoint, okay, I got an email from somebody who says, hey, I work from 6 a.m. to 5 p.m. and I don't have access to anything other than my phone. So I can't really sign up for Trendspider, but I want to do some trading. This would not be one that would be for you to trade. This is for somebody who has 15 minutes and wants to look at a chart and wants to trade something, and it seems like an opportunity, okay? The only reason that you don't want to take this one and say, okay, I want to trade it on a longer time frame, you wind up losing. You just wind up losing. Now, you can see the algorithm got you in here at $3.57. I hate this exit. I hate the exit on this 5-minute algorithm. I hate it because I think it just gets you out too soon. Now, I haven't figured out a great strategy on this one. I will. I just haven't figured it out. It's hard. On a 5-minute time frame, it's super hard to figure out when to get out. The best advice I can give you is wait for confirmation. And I use a 9-day EMA for my confirmation. If you want to know my entire system, here on the newsletter, there's an education section right there. You can just scroll down and see everything. Say I say confirmation. We'll scroll down and look at it. Confirmation, MACD, button hook. What the hell do I mean? I put it out there in charts. The confirmation on this one came right here at $3.84. Okay? You're trading at $10.55. I wouldn't have stayed in there for $10.55. I would have gotten out here at $6.83. You lost it. I would have gotten back in probably at this $8.61, but you lost confirmation. I would have chickened out and gotten out. Now, do you have confirmation now? You do. You just got confirmation at $9.02. And the market is, not open yet. You still have confirmation on this one, but the RSI is high. The MACD is high. More than likely, you're going to get a better price. Look at how much this MACD soared up. Okay, we've already reached that point on this one. So I wouldn't expect it to go past this. I would expect it to pull back. This is what you can do with technicals. This is the 5-minute algorithm. Okay, if you want this 5-minute algorithm, you can get it right here on Trendspider. Sign up on the link tree. Okay, you get taken to Trendspider. You sign up. It's $53 a month. But I would warn you, the 5-minute is not what you're signing up for. The 5-minute is just an added perk. The 4-hour is what you're signing up for. And I put it in the newsletter yesterday. Yesterday's newsletter was just how good that 4-hour algorithm is. And the reason is because I put it in QQQ. Okay, back-tested QQQ. That means the software goes back and looks at all the buys and all the sells. 21 positions in QQQ over 24.5 months, 56%. If you bought and held, you made 45%. Now, buying and holding, I would say QQQ, you want to buy and hold. This tells you when to get in. Now, if you want to get out, you can get out. I don't typically get out. I basically dollar cost average my way in. I use the 4-hour algorithm to do that. And when I see a huge downturn, yes, I get out. I got out on this 13% one. I sold a little bit there. Now, SPY, SPY, it makes you 39% versus 30% buy and hold. That's how good the 4-hour algorithm is. That's the benefit of signing up through the link tree is you basically sign up, you take a screenshot of your Trendspider account, and you email it to me. And then I email you back links where you get to import everything. And that's the benefit. And again, that was the point of the newsletter yesterday was that's how good it is. Faraday Future, it's nothing. Its market cap, $99 million. There's nothing to this. It is not the financials. They're not making money. The valuation of this, the PE doesn't even have a PE. They're not making money. Growth, it doesn't have any growth. They're not making money. Profitability, they're not making money. There's nothing. There is nothing. So this is something that you trade, not that you own. Okay, that's what I want to make clear. Now, we have Roku. This is a good company. Now, let's take a look at Roku because it's up 4% in the pre-market. This is Kathy Wood's, I think, one. It got an upgrade. So let's look at it in the quant. After Guggenheim Securities upgrades rating to buy. Let's see if they put a price target on it. I don't see a price target real quick, but they might have put a price target on. But we'll take a look at the overview of it. The overview, quant says a buy. This is seeking alpha premium, okay, when you look at the quant. You got 5 valuations. Five criteria for the stock: valuation, growth, profitability, momentum, and revisions. Okay. It then bases that on a score, 0 to 5. Roku has a 4.07. Now, you might say, hey, how do I know that this is a good thing? Quant Ratings beats the market right down here. Seeking Alpha's quants recommendations versus the S&P Total 500, okay? 26% annualized return. 26 annualized return. It beats the S&P. That's why the quant is so good. You can't buy every quant every quant stock. So it's just used as a guide. Hey, do I want to get into this one? Yeah, maybe. But again, this is a good stock, Roku. It's not great. They're not making money. You can look at that one. From a growth standpoint, that the valuation is what's bad. From a growth standpoint, they're growing. Who's going to buy them? That's the biggest question about Roku, is who wants to buy them, because they're not making money. It would make sense to actually integrate into another company. Now, when you look at Wall Street, they say it's a hold. There's 29 analysts that cover this one. Guggenheim just upgraded them. The average price target is $67. That's 9% up. Now, you can see the stock has just floundered, but it's been a hold ever since. A hold ever since from Wall Street. You can see that one. Seeking Alpha analysts say it's a buy. I thought it was interesting. I know it's one of Cathie Wood's lead stocks. I'm still a fan of Cathie Wood's. I'm not a fan of her funds, but I am a fan of her stock analysis, I should say. QQQ rallies after Piper Sandler upgrades them. Okay, they're up 2% in pre-market. We can take a look at the quant of QQQ. QQQ has a valuation of F. Their growth is A+. Profitability is a C. We can go and take a look at that. But the PE on QQQ is enormous. Now, the PEG, the forward PEG, which integrates growth, and we can go and look at the growth, but the PEG ratio is 0.24. Okay? We can go and look at the growth. 7%. Sector's growing at 2.11. I personally have ordered from QQQ before. You got all the momentum. We can look at the Wall Street analysts. The Wall Street analysts have a price target of 27. That's 5% up from where you are today. Now, there's 28 analysts that cover it. So let's go over here and let's look at the 4-hour, and we will look at Roku, because where does the 4-hour take us? Where does it tell us to go? Well, the 4-hour loses us 23%. The actual asset loses us 23%. So we know that we want to be very discerning if we want to get into this name. So we want to look at the moving averages. We want to look at the MACD. We want to look at a longer term chart. Okay? Because I can't trust the 4-hour algorithm right now if I wanted to get into this name. And this is, again, if you want to get into this name. So let's go and look at a weekly chart to see if we can tell where it is. Well, look at this channel that I put in. And I put this in well before. This goes all the way back to June of 2022. And you're at the bottom of this channel. Might be a good opportunity to get in when the 4-hour tells you to get in. Because you could move from 61 up to about 90. Okay? That's how you want to take a look at these opportunities. You're not going to find every opportunity. You're not going to be able to look at things like this every way. But if you use Roku devices in your house, this is the way to look at the stock and to see, are other people using Roku? Because we have an election year. They're going to make a ton of money off of their advertising. So let's take a look at QQQ, because QQQ has been in a downward spiral. Yes, I just started ordering from them, but the algorithm, here on the algorithm, it makes you 10% over 24 months. If you bought and held this, you lost 46%. Okay? The algorithm makes you 10%. Huge difference. So do I trust the algorithm? I do. And so when I look at this, I say, you know what? We just had a golden cross on the 4-hour. The 50-day starting to move negative. It got me in at 23, but I don't want to get in at 23. Their earnings are coming up. We got a gap down here. I don't know that this is a great time to get into this stock. I just don't. So let's take a look at a weekly. Will that give me any confidence? Well, we got the 200-day up here, but we've never really traded above that other than the hype part of 2021 when, people were still ordering and there were supply chain issues, but it's been a downward spiral ever since. Now, the 50-day starting to move a little more positive. You can't time the bottom of a stock. So what you want to do is you want to trade the trend. The trend right now is still negative. And I would say that the 4-hour is probably your best bet to make money on this one. And right now, because you don't have confirmation, because that 9-day is starting to turn down a little bit, I would not trust the confirmation. That 50 days just moving, the medium term moving kind of sideways, but the 200-day, the long term, has moved up. So if you like the valuation of Chewy in Seeking Alpha, if you like the analysis of Seeking Alpha, and then you go over to the charts and you look at it and you think it's an opportunity, you can look at it. I mean, that is one stock picking 101 and how to look at stuff. Now, Workday, it soared as investors cheers profit over growth. Plus, they announced an enormous buyback. We went over this one. Let's go over the 4-hour chart on this one. I showed you that Workday, it's software, and software was weak. And so we saw weakness in software come down, and now we're looking at the 4-hour. You can see going into earnings, it just kind of sideways on the 50-day, but the 200-day was negative. Would I have bought that 214? No. I wouldn't have felt comfortable buying that 214, even though the algorithm makes you 32%. Buying and holding makes you 33%. We got gaps up here at 289. Where are you in pre-market? 261. 261. You got a gap here between 236. Oh, and ironic, 260 from the previous earnings. 260. Where are you trading? 261. You're covering this gap. Now, I would expect this to be overhyped because, again, any reaction in the market is an overreaction. But clearly, it just covered that gap. So there's that one. Cava. Cava killed on earnings. Let's see. I thought I opened this one. Let's see. NVIDIA's quarter. Oh, I didn't put in Cava. Nothing on Seeking Alpha with Cava, but we can go and look at Cava if you want. Let's look at Cava. I don't think they had too much on Cava, but let's take a look at the quant rating. An F, D plus on profitability. This one's up 7%. It was good. I mean, the earnings were good. It was after they got downgraded. The day before they literally got downgraded. Yeah. Eyes on Jackson Hole, Sweet Greens, Dutch Brothers, another down day for restaurant stocks. And that was it. That was it. And then they just blew it away on earnings. I mean, they came out with more than what was expected. Now we can take a look at this stock chart. I am not, and I think it was Nick or somebody asked about Cava, and then they killed it. And I had said I wouldn't get into this stock. I don't need it, Cava. I don't. But again, if you go back and you did the analysis and you said, hey, this stock, the algorithm makes you 79%, buying and holding makes you 145%. You could take that and say, well, the algorithm doesn't work. But you know what? It makes you 80 freaking percent. Doesn't lose you money on this name. It makes you 80 freaking percent. Your average win is 21%. Yes, if you bought and held, you made 145%. But with this kind of, the fundamental score analysis with an F on valuation and a D on profitability, I'm not taking the chance. I'd rather make 80% than buy and hold something and just hope that it makes 145%, because we can see on a long-term chart, this one is quite extended. Even on a short term right now, it's quite extended. It's quite extended. I mean, the algorithm buy-in here was 79. You're at 101. That's a huge move. In pre-market, you're at 109. You're soaring to all-time highs. Again, it's an IPO. I'm not a fan of buying an IPO in the first year. I guess it's been a year, but they don't have a 200-day. It's a little bit tough for me to say, yeah, this is one to get into, because from what I see, I'd rather trade it than actually own it. Just stuff for me with this particular sector with food. Yeah, I don't know it very well. What I do know is tech. And NVIDIA's upcoming Q2 results are the most important in years from Wedbush. Dan Ives has been out there and he's been saying, buy it, buy it, buy it. They think it's like $150, $200 stock, I think is what they put on it. Now, we can see NVIDIA. NVIDIA up in pre-market. Anytime you'd see this one drop more than like 4% or so, you just buy it. Just buy it and hold it. In my mind, again, you can go back to that Trendspider video where they put in fundamentals. Go and watch that one and tell me that this one's overvalued. The quant has it as a hold. The reason the quant has it as a hold is the valuation. That's the only reason they knocked this down. Okay? The PEG ratio, super small because, again, they're going to grow. They have more cash on hand. They probably will announce a historic buyback or a dividend increase, or maybe even special dividend. Or they may just be investing in their own business to grow it continually. This is a good stock. When you look at Wall Street, okay, Wall Street has a price target of 142. That's a 15% upside. You can see they've chased it all the way up. Now, when this one dipped down here to 100, absolutely was a buy. Absolutely was a buy. We talked about, a couple of days ago, Steve Grasso said he got out of this one at about 130. It's hitting that 130. Let's go and take a look at the chart. Several times on this 4-hour, it has hit the 130 price point. It has hit the 130 price point. You can see it right here, 135, 135, and we hit the 130 here earlier this week. And now you're seeing the MACD cross over, cross down, RSI going down to 57. Take a look at the weekly, and I said this earlier, every time this one dipped down underneath the 21-day, you could buy it. And it was a gain afterwards. I would say the same thing now, except this is one of the top 3 market cap companies. It's hard. Now, if you want a little bit more analysis, this is the bulls could trigger this to higher levels, technical analysis. I want to read you the final conclusion. On past earnings history, particularly in the last 12 to 18 months, I would expect NVIDIA to surprise the market yet again with an earnings beat. If this is the case, we could see this stock bypass my original target from the last quarter and look for $210 within the next 100 to 220 days. That's huge. And that's technical analysis. They're doing that. Again, nobody knows what this stock is going to do. I don't know what this stock is going to do. I'm adding slightly to it. I mean, anytime this one dips, I add to it. I love this one because the valuation is not crazy, but you don't know what the market's going to do. You just don't. They could blow it away, and you could see this stock pop to 150, and then all of a sudden, within the next week, everybody's taking profits, and it goes back to 120. That's what you could see. You just need to expect volatility when you buy this. You put money into this and you don't take it out. This, in my mind, I agree with Jim Cramer. This, in my mind, is just one you buy. I don't think that you trade this one or sell it. Yes, my algorithm beats buy and hold. It does. My algorithm makes you 642% versus 581%. I would not expect that to continue. The algorithm wins 67% of the time. It plays in a middle ground, and with an upward moving stock like this, I could win on this algorithm all the time. Yes, it doesn't win all the time. It loses 33% of the time. Your average loss is 6%. Your average win is 24%. If you want to sleep at night and you can't do that by buying and holding, get the 4-hour algorithm. It's very simple. Again, you need to be able to sleep at night to do this. So Nick, social request. How do you think real estate stocks will react to the potential interest rate in September? I've seen historically they react negatively and positively with rate cuts. Do you recommend getting into any real estate stocks leading into the rate cuts? I'd say no. The majority of real estate stocks are REITs. And if you look at XLRE and we look at just the sector and we go to the holdings, I do own the home builders. So you can see Prologis, American Tower, these are REITs. Equinox, Welltower, Realty Income is a REIT. Simon Property Group is a REIT. It's in the core portfolio. That one has been on a tear. Public Storage has been on a tear. Digital Realty Trust has been on a tear. You can see this particular sector, if you wanted to get into real estate because of the rate cuts, I would do this. Now, the other thing that I told Nick is type your exact question into Gemini or ChatGPT. Now, if you want to use Gemini, this is my preferred AI. And for stock stuff, I'll just type in the question. How do real estate stocks react to rate cuts? Real estate stocks react to federal rate cuts. And you can just type that in. Positive impact on real estate stocks. There you go. You know, my name is Gary, not Google, not Gemini. We all start with a G, but AI is far better at doing this than I am. Now, it won't give you specific, stocks to invest in, but you can type these things into AI. You should be using AI. There is no reason anybody in this audience should not be using AI to get an edge on the market, to understand certain things. It can answer these questions for you. Now, does it give you graphs? No, but it gives you sources. It gives you sources. You can look at this. This is virginia.edu. This is an education one. This is bankrate.com, how the Fed impacts stocks, crypto, and other investments. You can read this stuff. So, Nick, I would say, I don't know. I would say trust the internet on this one. But do your own research. I would go into Seeking Alpha. I would look at that XLRE. I would look at some other stuff. I own ITB, and I own a couple of home builders, I think. ITB, I think I may have sold the home builders. But I do own ITB, and I own that one. I've added to it, and I've been doing okay in it. It's nothing that's blown up or anything. I think I was way down on it. Dollar costed my average. Now I'm kind of up on it. It's a small position. Honestly, it's a small position. Nick, again. I know you mentioned a little the other day on ANF, Abercrombie & Fitch. With their earnings coming out soon, I feel like it could be a strong buy and maybe a spike. Do you recommend going balls deep or just put the tip in? Also, I recommended to get into Cava before the earnings, and they jumped 10%. I have a feeling they're going to be the next best fast food as they grow rapidly, even though the numbers don't look the greatest. They are cooking right now. Hey, way to go on that one, on that little pun, Nick. High five on that. I would never suggest going balls deep on something that you don't know enough about. I will tell you that Alpha Picks, which is the third link here, this is an Alpha Pick. So the reason why I recommend Alpha Picks is because of the performance. And Alpha Picks is just a portfolio that you can get access to. On day one, you get all of the analysis. Every analysis of every stock they've picked. The performance is unmatched, 114% during the same time period that the S&P was up 38%. I would say if you want more analysis of ANF, go to Alpha Picks. Abercrombie & Fitch, I would, if you're buying Abercrombie & Fitch, Nick, and you're actually wearing it, and you and your buddies are out there going, God, I need that freaking, that sweater vest. Go balls deep. Balls deep is the name of the game. Now, if you look at Abercrombie & Fitch, this one has been a monster. A monster. And again, look at that. This is just, I think this was when Alpha Picks picked it, to be honest with you. But yeah, it's been a monster, 467% in 10 months. My algorithm makes you 616%. You make 695% if you just bought and held. So you're doing really well. My algorithm wins 60% of the time. We can take a look at that 4-hour algorithm. And this is, again, if you want the fundamental analysis, go over to Seeking Alpha and Alpha Picks. Alpha Picks will do it for you. But this one with ANF, you can take a look at it. The algorithm got you in at 138. You're up 21%. You're up 21%. So it got you in here, got you out right before the downturn, got you out before the downturn, got you in here at 138. The MACD, a little bit high. Am I buying balls deep into earnings? Let's see how it reacted last time on earnings. Shot up. Maybe this time it shoots up. Let's see how it reacted on this one. Shot down. But you know what? You're buying here at 133. You're perfectly fine. 2 months, 6 months later. 6 months later. March 2024. 6 months later, you're perfectly fine. You're up 20%. So, let's take a look. We can go back and look at some of the other earnings. Let's see. My guess is that it's been doing fine. Yeah. Look at this earnings. I mean, you're in the middle of that run. You were buying here at 72. You're perfectly fine. Less than a year later, you're way up. So I would never assume that you'd go balls deep right before earnings in a stock that's up 600+% over 2 years. I would say stick the tip in. But again, if you're buying that sweater vest, and you're throwing on major amounts of cologne, I'd go balls deep. JD from Instagram. Morning, Gary. Your teeth look good, bro. Hopes of sleeping better. I could tell you were in a mood in one of your last shows. Absolutely. Absolutely. And my apologies. It happens to all of us. Have you ever looked at SERV? NVDA has a 10% stake. I've been burned before through buying into a company just because a good company bought into it. Anyhow, not trying to bother you, but thought you might want to take a peek. Have a good day, home slice. I'm thinking about picking up 100 shares. If it goes to $10 or below, just to trade it, not hold. Yes. Yes. That's exactly, JD, you said it yourself. Hey, this one is just one you trade. I mean, it's just one you trade. Again, the 4-hour algorithm makes you 335%, but it's because of this 548% that there's no way it knew anything. No way. It just got lucky. It just got lucky. Would I invest in this one? No. I would absolutely trade it because buying and holding this one loses you 32%. 32% over just 5 months, because that's all it's been out is 5 months. So I do think that this one was overhyped up here at $39 and $40. And then earnings came out and all of a sudden, boom, this thing is just crap. And now that it's out there that NVIDIA got into it, it's 5 times from $2 up to $10. It's at $9.91. Right now, it's down 2.48%. I would trade it on something like, let's see how the 65-minute algorithm does. But again, I would find something that trades it well. 65-minute makes you 257%, okay? But that's because of this huge run-up where you made 83% in this stock. 83%. So, again, it is skewed by this huge news when it came out that NVIDIA got into this. It's skewed. Right now, your 50-day turning down, your 200-day still positive, but you might have a death cross here. It's moving right into where it's going to either use the 200-day as support level to bounce it back up, or it's going to shoot right through it, and you're going to see this gap fill between 394 and 277. One or the other. You know, the MACD has reset on this 65-minute where it's below the oscillator. RSI is oversold at 28. It could go either way. Am I willing to take a chance on this one? No. But, you know, again, I don't have a lot of the risk tolerance for something like this that's not making money. So you got to make up your mind as to what type of trade you want. But I think you put it perfectly. I might pick this up. Just make sure you have your stop losses in, JD. That's it. For something like this, you want to put in a 5% stop loss for a 10% gain. So you put in your stop loss and you put in your top, okay? And you take out that top and move the top up as it's actually going up. You don't move the stop loss down as it's going down. You take your stop loss, set it at 5%, set your max gain at 10%. It might move out of the 10% realm before you get a chance to actually move it up. But just buy back in. Just buy back. It's a trade. So that's the way you play that one. I think you put it perfectly. Now, scans. We don't have much. And we don't have much because we're in an upturn. You know, and a lot of this stuff has gotten us out. I mean, we have a good market right now. I'll check my portfolio, my personal portfolio in Fidelity. I'll check it right now on the air live here. We're at 934, so the market just opened 4 minutes ago. And remember, my portfolio is run by Apple. I don't know where Apple is, but it's probably up. I am up 0.58, and the NASDAQ is up 0.75. So I'm underperforming, and I can almost guarantee, yeah, Apple's up 0.67. So I've got something in there that's probably losing me a bunch of money. But again, I'm perfectly fine at 0.58. It's a nice 5-figure, day gain for me. So, I will survive anything that today throws at me. That's how I sleep at night. I will survive anything that the market throws at me. Now, if I go all in on something like SERV or FFIE, yeah, I would not sleep at night. So everybody has different risk tolerances. AstraZeneca, we saw this one at $80. Got to buy it. It got another entry here. Could move higher. You're at $86. There was just news that they're having a fight with the English government on something. BKR. This is Baker Hughes. BKR is Baker Hughes. We didn't have much. We didn't have much like scan wise. So this is down into the NASDAQ that, NASDAQ 100 that I scanned for some things. Baker Hughes. Yeah. AEP, Abbott Labs crossed over. One that crossed over, this is interesting. UVXY. So this is a triple played short on the VIX. So when the VIX goes down, this one goes up. And what you want to do is you want to take a look at the VIX. We talked about the VIX a lot, how it spiked to 65. Well, you can play UVIXY for actually huge gains on this because it's triple levered. So on days when the VIX is going down, and it's down by 3% today. This one is actually down. Yeah, see, some of these are broken. It gets traded heavily. When people know that the VIX is coming down because people are buying, this one starts to get traded heavily. 2503 was the buy-in. It's trading at 2405. My guess is that, again, you want to trade this on a short time frame. But the VIX is always coming down after a one-day sale like it was yesterday. Yesterday spiked the VIX. Today, this one's going to be up. Now, you don't want to use my 4-hour algorithm on stuff like this. These are decaying assets, and they're triple levered decaying assets. So I would say you use something like the 65-minute rather than the 4-hour. But this one is interesting in that it came up. The 65-minute loses you 2% versus losing 48% with the actual asset over 8 months. So that one's interesting. Another one scan that was interesting. We talked about XLRE because of Nick's question on real estate. XLRE, it's an entry. And we can go and look at this one. This has been a strong, strong mover. You're in at 38, and you get another leg up here at 42. Yesterday it crossed up, so it's a matter of 42, and you're 42.75. XLRE has been, we can go and look at the market data, okay? XLRE has been one of the best year to date. It's not great, but 1 month you're up 4%. Okay, the only one that's beating it is utilities, which is a 6.35. Consumer staples and healthcare are also up 4%, but it's been one of the best. Over 1 year, it's up 18%. Year to date is only up 6%. So this one has lagged behind. If you take a look at this 4-hour algorithm, you can see we've gone right there. Now, the weekly shows you how weak real estate actually was. It was below its 200-day. And it's come back and it's gone up above the 200-day. And it seems to be holding. So at 42, if you buy 42, you set your stop loss at 40. Again, if real estate is going to move because of prices, this one will go up. It just will. And so you could be looking at a nice 10% move here when the real estate, it's already priced into the market, but you could look at another 10% as the real estate market continues to flourish. Just interesting. Again, the 4-hour algorithm gives you opportunities. So that's the show. Thank you for staying with me for a week of technical issues. Remember, everything's on Linktree. You can join the private Facebook group. You can join, follow me on X. You can get Trendspider. You can do everything. I think with portfolios, you have two. If you're looking to build a portfolio, 2 options here. I would say Alpha Pix is your first option if you want something where it's just handed to you and you get it. The second option would be Savvy Trader. Now remember, Alpha Pix is a premium portfolio, and you have to pay for it. But here in the, I got to sign into Savvy Trader. Let me just sign in real quick. But here on Savvy Trader, if you just click that link on Linktree and you go over to Savvy Trader, it's my core portfolio. And the core portfolio here, that's the trading portfolio. We'll go to the Daily Stock Pick core portfolio. It's 35 names, and you could build your position on this. Now, you can say, well, how does this compare to QQQ? You can see right here. QQQ is up, let's say, over this year to date. Let's go 1 year. Let's go year to date. Year to date, QQQ is up 17%. The Daily Stock Pick core portfolio is up 34%. Now, I wouldn't suggest that you go and build a portfolio exactly the way this is. This is just 100 shares of stocks. When I pick a stock, I buy 100 shares of it. When I delete a stock, I sell 100 shares of it. Okay, it's not very active at all. Maybe 1 or 2 per quarter. Maybe as much as 4 a year, 5 a year is when I pull stuff out of this and put stuff in. There are winners. There are losers. You can see, we can look at the total. We can see, there's the total gains and stuff like that. I don't know how to look at the view. Table. Let's see, there we go. Okay, so we can look at the total return. You can see Tesla is down 20% since I put it in here. Boeing is down 18%. Pepsi's down 5% since I put it in. Occidental Petroleum, I sold out of that in my own personal portfolio. I think I'm going to pull it out of the core portfolio. It just hasn't done anything. It's in there because it's oil, but I think there's better oil plays. The better oil play is MPLX. Where is MPLX? MPLX, where are you? Can't find it. There it is. It's up 25% since I put it in the portfolio. So again, it's just 100 shares of each. I would say pick your favorite companies, pick your favorite, add to your winners and reduce your losers. That's how you can build a portfolio with listening to me. Again, it's all on Linktree. You can find everything on Linktree. That's it. Okay. Have a good weekend, everybody. I'll see you later.
Every
Bye.
morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.